Howdy, everybody. Welcome to Liberty Call. Today is Wednesday, December 18th, 2024. Hope you're having a fantastical day out there in the interwebs. The markets did not have a good day. They were doing fine this morning. It was, everything was in the green. Got eyelash in my eye. And everything was looking fine. And then things just fell apart. We'll get to that in a minute. Before we do, I need a favor from you. If you could give me some thumbs up, a like, a share, a subscribe, a follow. Press the notification bell. All right, now we can get into the news. Let's see. All right, Dow Jones, down 2.58%, 1,123 points, closed at 42,326. The S&P 500 down 3.01%, 182 points, closed at 5868. The NASDAQ down 3.62%, 728 points, closed at 19,380. The VIX was up 57.84% today. It's at 2505. Big jump for the VIX. If I could stop here for the VIX, what you need to remember is that, anything over, in my view, anything over 20 is kind of like your yellow light. If you're coming up to an intersection, anything below 20 green, 20 to 30 is yellow, above 30, really nervous. It's your red light. Stop, proceed with caution, look both ways if you want to keep going. So anyways, all right, moving on. Canada down 2.24%, Brazil down 3.19%, Mexico down 0.93%. Over in Europe, mostly green because the Fed hadn't had their statement yet. Germany was up 0.07, the UK up 0.05, France up 0.26, the Netherlands up 0.34, Spain up 0.26, Italy up 0.25. Switzerland down 0.86 and Portugal down 0.82. Russian exchanges in the green today. The MOEX up 1.15, RTSI up 1.37. And the overnight markets, the Nikkei was down 0.73. The Australia was down 0.06. New Zealand down 0.13. In China, the Shanghai was up 0.62. Shenzhen Component up 0.44. China A50 up 0.4. DJ Shanghai up 0.7, Hang Seng up 0.83, Taiwan weighted up 0.65. All right. Woo. Weird day. Well, let me bring up the chart for today and we can see what happened. So we can see here's the start of the day, opened up. The little dotted or the yellow dotted dashed line is the open. It was up about 0.5%, maybe less. Most of the morning until 2 p.m. Eastern and noon my time. And when do you think Chairman Powell started talking? I think it was about right here at 2 o'clock and then all the way down. Same thing with the NASDAQ and the S&P 500. So strange days, folks. Let's go out to the, So that makes the 10th day in a row for the Dow. 1, 2, 3, 4, 5, 6, 7, 8. Wait, 1, 2, 3, 4, 5, 6, 7, 8, 9. Yeah, 10 days in a row that we've had negative or markets in the red. Looks like 3 of the last 10 for the S&P. And this is the first time that the NASDAQ has had any real fluctuation. It really dropped. So, all right, let's get out of there. All righty, get that off my screen. And let's move on over to the market recap for today and see what they had to say. All right. Federal Reserve cut interest rates by 25 basis points on Wednesday, but adjusted its outlook for 2025, having the previous projected rate cuts. Well, that's probably why the market's mad. Concerns about the slow progress towards the 2% inflation target, well, that's because you cut rates too early, prompted this more cautious stance. The Fed now forecasts a benchmark rate at 3.9% for 2025, implying 2 rate cuts instead of 4 anticipated in September. Again, I don't understand why people think we need to cut rates. This shift spurred a rise in Treasury yields, with the 2-year Treasury yield climbing 8 basis points to 4.319%, reflecting heightened investor caution about inflation persistence and its economic implications. In tech sector movement, amid the broader market decline, NVIDIA rebounded as investors capitalized on its recent dip. The chip makers' recovery helped contain losses in the tech sector following its 10% drop from its recent peak. Jabil Circuit Incorporated surged 8% after surpassing fiscal Q1 earnings expectations, or that's probably quarterly, not Q1, and offering strong guidance, contributing to positive sentiment in the sector. Earnings highlights: Birkenstock Holdings posted Q4 results exceeding Wall Street estimates, boosting its shares by over 3%. In contrast, General Mills fell sharply after revising its annual earnings outlook downward, citing margin pressures from increased promotional spending. Yeah, it's probably all that money you're paying, like JJ Watt and the Kelsey brothers for those stupid cereal commercials. So, I mean, I know JJ Watt never turns down a dollar. He's the hardest working man outside of, or since he left football. All right. And wrapping up here, the Fed's more restrained outlook for rate cuts and the jump in Treasury yields weighed on equities, particularly as investors grapple with concerns about inflation and the Fed's trajectory for monetary policy. Meanwhile, selective recoveries in key sectors like tech offered a glimmer of support. All right. So that's some awesome news. Let's get to some data before we jump into what the Fed did. November housing starts. This report comes via First Trust. Mr. Nate Guernsey put it together. All righty. Housing starts fell 1.8% in November, hitting a 4-month low and missing consensus expectations, driven by a 23.2% decline in multifamily starts, despite a 6.4% rebound in single-family construction following hurricane disruptions in prior months. Building permits, a forward-looking indicator, rose 6.1% to a 9-month high, bolstered by a 19% surge in multifamily permits. However, both starts and permits remained subdued, down 14.6% and 0.2% year over year, aligning with 2019 levels. Completions, despite a third consecutive monthly decline, are up 9.2% year over year and surpassed any monthly pace seen from 21 to 23. However, the total number of homes under construction has dropped 14.6% since early 2024, a level typically associated with a housing bust or a recession. That could be in our future. Challenges: builders face hurdles, including restrictive regulations, a tight labor market, and elevated mortgage rates. While rates initially trended lower before the Fed's September rate cut, they have since increased by 50 basis points, further pressuring activity. Some tailwinds: limited inventory of existing homes as sellers cling to sub 3% fixed rate mortgages, supports demand for new builds. Additionally, millennials, now the largest generation in the U.S., are entering the housing market in increasing numbers, offering a demographic boost. So what's the outlook? While housing is unlikely to drive substantial economic growth in the near term, a major bust akin to the 2000s is not expected. The National Association of Home Builders Housing Index remained at 46 in December, reflecting continued pessimism among builders as more view conditions as poor rather than good. All right, so awesome news. I mean, it's not terrible, and eventually the boomers will die off and there'll be plenty of houses for the not the millennials, the Zoomers. Anyways, all right. Next up, from Zero Hedge, hawkish Fed rate cuts cut rates as expected, signals dramatically less aggressive rate cut cycle. All righty. The Federal Reserve delivered a widely expected 25 basis point rate cut, bringing the target range to 4.25 to 4.5. However, the central bank signaled a more hawkish stance moving forward, with fewer rate cuts anticipated next year, despite a slowing economy. Key takeaways from the announcement include a hawkish policy shift. The Fed revised its inflation forecast for 2025, raising the PCE inflation projection to 2.5%, up from 2.1%, citing expectations of inflationary pressures linked to President Trump's policies. Yeah, it's his fault. Hasn't even taken office yet. This reflects a departure from the 2% long-term inflation target. Interest rate path. Fed members adjusted their dot plot projections, aligning more closely with market expectations for fewer rate cuts. 2 cuts are now forecasted for 2025 compared to 6 in the earlier in the year. Notably, 2026 rate expectations hit a record high. Mixed economic outlook. Despite hawkish adjustments, the Fed anticipates low unemployment rates remaining steady. Sure. Suggesting optimism about labor market resilience. However, rising inflation and elevated interest rates hint at potential economic risks, with recession concerns looming. Market reaction. The Treasury yield spiked following the announcement, with the 2-year Treasury yield rising by 8 basis points. Financial conditions remain loose, similar to the pre-rate hike levels, as markets adjust to the evolving policy environment. And debt and fiscal concerns, with the federal debt poised to rise by $15 trillion over current baselines, reaching $50 trillion in 2 years. 2 years. Oh my God. Concerns about fiscal sustainability persist, adding to economic uncertainty. And finishing up here, the Fed's approach suggests a cautious balance between containing inflation and supporting growth, while market participants brace for potential challenges in 2025. This marks a shift from the crisis-driven policy stance of recent months, setting the stage for complex economic dynamics ahead. Yeah, these fools created this problem. And now they're like, well, we're not sure. It's, it could take a little longer. In the Fed, audit the Fed. All right. One last article here also from Zero Hedge. It has to do with the continuing resolution that is causing heartburn in DC. This one's titled "Johnson May Scrap Spending Package, Push Clean Bill After Pork City Exposed." Yeah, there was a lot of Twitter headlines and Twitter posts about people freaking out about the amount of garbage in this bill. All right. House Speaker Mike Johnson unveiled a 1,547-page government funding bill known as a continuing resolution, or CR as they abbreviate it, aimed at averting a government shutdown by extending funding through March 14th. Because, if the government shut down, what would really happen? Nothing. Federal employees wouldn't get paid, but they get paid back after the fact because, they can't go without a meal. However, the bill is riddled with contentious provisions, sparking opposition across party lines and raising the likelihood of a shutdown. Yes. So here are the key provisions. Disaster relief and aid. This bill includes $100 billion for disaster relief, $30 billion for farmers, $8 billion for repairing the Francis Scott Key Bridge in Maryland. It seems like a Maryland problem, not a federal problem, in my opinion. I guess unless it's on like a federal highway. Pay raises. Congress members are slated to receive a pay raise via resumption of the cost of living adjustments, ending a decade-long freeze. From what I saw, they want to go from about $174,000 is where most Congress people, what they make, up to about $240,000. So I think they deserve a $70,000 raise. Come on. They got to eat. And number 3, special projects and policies. The bill features funding for new biolabs and pandemic preparedness measures. Yeah, because we did great last time. Vaccine injury compensation revisions that limit eligibility. Yeah, because you don't want those vaccine makers to pay for problems they cause with people. Infrastructure budget increases, doubling some funding allocations. Exempting the Department of Commerce from Freedom of Information Act requests. Yeah. Opposition and criticisms. Republican hardliners, conservatives in the House Freedom Caucus criticized the bill for excessive spending, lack of transparency, and unrelated policy measures. Vivek Ramaswamy and Elon Musk, they argue that the bill represents fiscal irresponsibility and urge Congress to reject it. And Senator Ron Paul called the bill a weak attempt to manage government spending effectively. So the legislative hurdles: GOP hardliners demand adherence to a 72-hour review rule, offsets for new spending, and restrictions on border wall material sales. The Senate has only 24 hours to pass the bill if the House approves it Thursday, making a shutdown increasingly possible. This bill exemplifies frustration with fiscal governance and highlights the urgent need for reform as it exacerbates federal debt and stifles public trust. Yeah, well, if I had my solution would be everyone just stop paying their taxes. The federal government falls apart in 90 days, and then we just start over with a bare bones minimum. Let's just keep the highway department, a very small military. Really, the Coast Guard does most of the crap around our shores. So, bring the Navy back, have them just patrol the sea lanes, bring all the Army and everybody else, Air Force back onto our shores. They can help build the wall. They can help rebuild, the Southeast, Appalachia that's been so heavily damaged. They could basically just be, government slaves to do all the government projects until their enlistments are up, and then they go out to the civilian world. That'd be my solution. All right. Well, that's everything that I had to cover for today. If anyone needs anything from me, please go to, wait for it, DSAFinancialGroup.com. All your financial planning needs can be addressed there, so give me a buzz. I'd be happy to help. All right. Well, like I said, that's everything that I had to cover for today. Hope everyone has a wonderful evening, and I'll talk to everyone next time. Adios.